Macquarie Group has announced a net profit after tax of over $3.5 billion for the year ended 31 March 2024. 66% of income was earned outside Australia. The group declared a final ordinary dividend of $3.85 per share. Shemara, thanks so much for joining us. How would you characterise the overall result?
Well, this year, as we've been guiding throughout the year, we had a situation where the market conditions, external market conditions, were less conducive, and so the result was down 32%. But what was pleasing was that all of our franchises saw growth in their customer numbers, their underlying income, etc.
What were the key drivers of the result in your annuity-style businesses?
Well, starting with banking and financial services, as I said, we were pleased to see the underlying franchise growth in all of our businesses, and there we saw growth in our funds on platform, our loan volumes, and also our deposit volumes, and we saw lower credit impairments as well. But that was offset by increase in our investment in the platform and, of course, the market-driven margin pressures. Despite that, BFS was able to deliver a record result, which was very pleasing. And then in Macquarie Asset Management, we also saw franchise growth. So our assets under management and equity under management grew, our base fees grew. And so all up, good growth in the franchise, some record fundraisings as well. But that result was impacted in terms of the net number by the transition of our green assets from a balance sheet to a fiduciary strategy, which had a drag on earnings, but is something we're very committed to for the medium term.
And what were the key drivers of the result in your markets-facing businesses?
Well, starting with commodities and global markets, there as well, we saw very good franchise growth. The number was, of course, down because we didn't experience the volatility in market conditions that we had both in FY23 and FY22. But what was pleasing is that the underlying revenue exceeded the FY22 revenue without volatility. So the franchise has stepped up really nicely across all of the businesses. Now that was offset by the fact that we are investing strongly, and particularly over FY22 and 23, in the operating platform for CGM to make us resilient and position us for long-term growth. Financial markets particularly also saw very good growth there. And then in Macquarie Capital, the result was up strongly, as you saw. Big driver there was investment-related income, particularly from the growth in the credit portfolio that's delivering very good annuity income in Macquarie Capital, and we had lower impairment charges, but that was offset by a step down in fee revenue given the market backdrop for client activity.
And how are you thinking about cost management in the current environment?
Well, the results make very clear that our costs stepped up materially over FY22 and 23, and then that has abated a little over FY24, and we're reasonably flat in costs. Now, these investments we're making are very considered investments, first of all, to drive revenue and grow the platforms, because as I said, we're growing the client franchise as well across our businesses, but we also are investing in areas, as Alex has been, our CFO has been disclosing in our market presentations, in technology to respond defensively to cyber challenges, etc., but also in terms of revenue driving. And then in regulatory response, where evolving regulatory requirements have required us to really invest in our platforms and maintain our license to operate. And that is also now starting to bear fruit as a lot of these projects deliver on what we'd hoped.
So looking ahead to FY25, what's the outlook for Macquarie's businesses?
Well, we expect all of our franchises to continue to grow, and I think in our market presentations we've shared details by each of the operating groups, but we see ongoing growth in our loan portfolios and funds on platform and deposits in BFS, base fees and annuity income and performance fees in Macquarie Asset Management, Macquarie Capital's investing and client services, and CGM in terms of the client franchise across commodities and financial markets. But that will obviously be subject in any particular year to what the external market conditions are like. For the medium term, however, we think we are very well positioned with our diversified portfolio of businesses that are exposed to very strong underlying structural growth themes where we have deep expertise, and that is supported by our operating platform where we're investing, as I said, in the platform itself, but we also have a conservative approach to funding capital liquidity that positions us well for downturns and responding to opportunities. And we also have a proven risk management culture, all of which together I think positions us, as has been the case for many decades, for medium-term opportunity.
Tamara, thanks so much for joining us.
Thanks, Laura.